Improving Employee Healthcare and Reducing Costs with Direct Primary Care. And I'm super excited to be co-hosting this with Neer. My name's Jeff Panzer. I'm a family physician. I opened up a practice called Bridge Direct Care, which is a direct primary care practice, just this summer, just in August. And I'll tell you a little bit more about my story later on in the webinar, but really excited to be here with all of you today. I'm going to pass it to Neer to talk about himself, introduce himself.
Thanks, Panzer. Hi, I'm Neer Patel with Virtuous Benefits, one of the founders of this benefits agency. We created it in 2020 to help employers learn how to do healthcare and health insurance specifically differently. I'm also co-founder of Direct Med DPC, a direct primary care practice in Austin, Texas that my wife owns. And so have intimate understanding and knowledge of the direct primary care model.
All right, thanks, Neer. So before we start, again, this webinar will be recorded. If you'd like to ask a question but prefer not to be on the recorded webinar, we can stop recording towards the end and answer other questions. Also optionally, but if you can, I don't think I'm going to be able to see it, but Neer, if you can look out for the chat, what are you hoping to get out of this webinar? What brought you here today and what do you hope to learn? So if you can quickly jot that in if you'd like. And maybe Neer, you can throw in the chat that question too, so if folks join late, they could answer as well.
Absolutely.
So without further ado, we're here talking about healthcare, but also health insurance. And so one of the problems specific to health insurance that we wanted to sort of highlight that I think most people are aware of, that employer-sponsored health insurance premiums and worker contributions to healthcare continues to rise. And so this is from the Kaiser Family Foundation from 1999 to 2023, and we see just the increase of premiums on the left and the increase of worker contributions on the right, seemingly continuing to increase in seemingly endlessly. And so I don't know if folks are familiar with this iron triangle of healthcare, where the idea that you have quality, you have access, and you have cost. And if you improve one of these, you will affect one of the others in a negative way. So, for example, if you improve quality, then you're increasing cost, or if you decrease cost, then you're negatively impacting access, and it's not a win-win situation. And we've all felt the implications of that, and part of the reason those costs are going up. But the only way to simultaneously improve all three of these things is by doing it in a new way. So by definition, like an innovative way, something that is new, innovative, and could change how the system is done. And so we're excited to talk to you today about that system. So the idea of improving cost, quality, and access with direct primary care for 80 to 90% of healthcare needs, and then affordable coverage for your other needs with self or level funded insurance. And then another option is health shares. And so we're going to start by doing, we're going to go to the direct primary care second, but first we're going to start with, I'm going to interview Neer. Some questions that I had, and I'm sure you may have. How do small businesses get affordable coverage that gives access to high quality care? So I'm going to stop sharing my screen. Bear with me here. Okay. So, Neer, I'm going to ask you a few questions if that's okay. So just to start off the top, what is self-funded insurance?
Yeah, so there's a lot of misunderstanding, I think, with self-funding. Self-funding, in the way that it sounds scary. It sounds like somebody's telling a company, let's just forget about insurance and just fund all your own claims. And people usually associate self-funding with companies that are very large, like Google and Apple and and think that those are the only types of companies that can self-fund their health insurance. And so I just want to give a few kind of pointers on what self-funding actually means. So with self-funding, it helps contradict all of the problems that I believe exist in the traditional insurance system that we're all used to. And one of those main problems is transparency. So when you're a business owner and you're getting a quote on health insurance from a broker, they're basically just getting a spreadsheet of demographics from your employees, just basically name, date of birth, and zip code. And then they're going and getting a quote from what I call the BUCAs, which is an acronym that I use for Blue Cross, United, Cigna, Aetna. And so they're not rating the premiums logically. They're just taking demographics, and those BUCAs are assuming that all these employees, no matter how old they are chronically ill. And so when you don't give any transparency to the insurance company on the health that they're trying to insure, they're not going to give you transparency back on anything either. And they're going to rate the premiums assuming that everyone's sick so that they make money, because they're never going to lose money. And you don't get transparency around the numbers. So if that traditional quote comes back at $600 per employee per month, the insurance company, Blue Cross or United, they're not going to tell you what they're doing with that $600. They're not going to tell you how much of it is their profit and how much of it they're reserving to pay for claims and all those sorts of things. So in self-funding, those problems are eliminated. Number one, we're rating the premiums logically based on the health of our staff. So in addition to that same spreadsheet of demographics, my agency will also use a simple health questionnaire. It's very similar to a life insurance application that just goes back 5 years and is looking for major things that are ongoing conditions that basically insurance will need to help an employee pay for. And the presumption that we operate under is people who are able to show up to work every day are generally healthy, right? Because they wouldn't be able to do that if they were chronically ill. So we're able to get much better rates right off the bat by doing this simple health questionnaire. And our agency has plenty of back office staff that makes it really easy for the employee to do this. We basically just do a quick 10-minute phone call, interview them with our questions, pre-fill the form, and then email it to them as an e-sign request to make sure everything's been filled out correctly and sign and date. And then that way we can send health questionnaires as well as the demographics to the insurance carriers, and we can get logical rates based on their health. And we also get transparency around the numbers that we get in our self-funded health quotes. So when we get a quote, it's usually half of the $600, and then they still break that $300 down and they tell us exactly what's happening to the money. And that's powerful when you're an employer spending such a high cost to help care for your employees. You want to know what's happening to that money, and it's powerful also because we're able to refund unused premiums within self-funded health plans. We're able to refund the unused premiums. So if there's money that's set aside to pay for claims that doesn't get used, we're able to refund that back to the employer.
Thanks, Neer. And what is level funded insurance?
Yeah, so you can really just think about level funded and self-funded health plans similarly. So level funding is basically self-funding for small employers. A lot of our businesses in Texas, we're able to self-fund or level fund groups that have 2 employees or more. And certain states around the country have some minimum requirements. So there's a few states where you might need 11 people or you might need 20 people, but the majority of the states around the country, we can do it with small groups, 2, 5, 10 employees. But you can really think about level funding and self-funding pretty much the same.
And are your health insurance plans compliant?
Absolutely, yeah. So that's a big part of any health insurance agency or advisory company is to keep their employers compliant in every aspect of the health plan. And so the health insurance plans that we put together are ACA compliant. They meet all of the rules and regulations around the Affordable Care.
Does your health plan use a traditional network like Blue Cross or United?
So that's a great question. So we can absolutely use those types of networks if the employer feels like that's something that they absolutely require. However, we want everybody to understand how the insurance companies actually make money. So most people would think they're making money from my premiums, right? A certain percentage of my premiums is how they make money. That's just the baseline of where they start making money. The real place that the insurance companies make money is through their networks. So these are networks that they're charging us to use. So we're paying a premium to use their networks. And they're basically forcing us, once we have one of their health plans, to use their network, right? Because if we decide to go outside of network, the majority of the time, those plan designs have basically penalties for doing that, where they're going to double your deductible. And the BUCAs make us think we're penalizing you for going out of network because out of network is very expensive and we're trying to protect you from doing that to yourself. That's what they make us think. But the actual truth is they cannot gouge us when we go outside of their network. And every direct primary care practice around the country is out of network. And I would argue that they are the providing the most affordable and high quality care that patients are getting all over the country. So what I mean by gouging through the network is every single time that we use our Blue Cross or United or Humana or Cigna card when we get healthcare services, there's an actual cost of that healthcare service. It's usually close to whatever the cash price is that the medical office will quote you if you tell them you're a cash patient. Um, but then there's the insurance price, right? And so what they're doing is the BUCAs are tacking on all these administration fees, right? 5 people have to handle the bill. Once we get it, we have to audit it, we have to verify billing codes, we have to pay their salaries and benefits and all these other things. And so we have to pay ourselves. And so a specialist visit that costs $300 actual cost can easily turn into $1,200 after all that. I think blood work is something that everybody can relate to. Everybody gets blood work on a regular basis usually, and they quickly realize any blood work that they need outside of the annual preventive blood work adds up very quickly. Those are not the actual costs of blood work. The actual costs of blood work are what direct primary care physicians provide, which is $3 here, $5 there, $10 there, right? But when we use our insurance, now blood work becomes $100, $200, $500. Same thing with advanced imaging. If you go get an MRI and you use your insurance card, they're usually going to bill somewhere between $2,000 to $3,000 for that MRI. And if you have a $500 or if you have a $5,000 deductible, you're going to now get the bill for that full, let's call it $2,500 MRI. The actual cost of an MRI is $400 or $500. So that this is what's happening through these networks. They're forcing us to use these networks. They're charging us a premium to use them, and then they're gouging us when we do use them. And since they're gouging us, the cost of the care becomes astronomically higher, which means the amount of claims that were filed through the health insurance plan become astronomically higher. And so the BUCAs then penalize us for having those high claims at the end of the year when there's a renewal to be put together for the following year's health plan rates. They basically say, well, you had however many hundreds of thousands of dollars worth of claims through our network, and so now we're going to raise you 30% next year. So it is very beneficial to companies to remove the network, which is what we help them do through our health plans.
Thanks. So going back to self-funding, can very small businesses self-fund?
Yeah. So if it's a very small business, let's say two, three, four people, it's going to be a level funded plan. And so basically what that means is we know exactly what the premiums are every month. We're not paying claims as they come in. We're just paying a fixed premium every month, and then kind of all the work behind the scenes happens on figuring out how much is actually coming in claims and how much are we paying for those claims, and is the employer paying for those claims, or is the state loss insurance paying for those claims?
Speaking of stop loss, what happens if they run out of money, the business?
Yeah.
Or
So that's a really great question too, and a very common question that most business owners are trying to understand, right? What if I'm self-funding, that means I'm paying a portion of claims, and what if we run out of money, or what if we go over what we budgeted for? And so I want to make it 1,000% clear. Every single health plan that we put together has what's called stop loss insurance built into it. And stop loss insurance is essentially the real insurance in our insurance plans. So what happens is there is a typical plan design with a deductible like we're used to for the employee, but there's also a deductible for the employer. So let's call it $30,000, right? So if we put together a health plan that has a specific deductible or employer's deductible of $30,000, that means any claim that is below $30,000 gets paid for through the claims fund that we are building through the premiums that are getting paid in. So as the premiums get paid in, about half of the premiums are being set aside into a separate account called a claims fund, and we are paying those small claims that are under $30,000 through that claims fund. And then any claims that hit over $30,000, the stop loss insurance that we have built into the background is picking up. And there is no limit to what the stop loss insurance will pick up. So somebody ends up in the hospital, somebody gets cancer, somebody needs a major back surgery or knee surgery or hip surgery, the stop loss insurance is picking up all of these expenses. Um, and so that's how it works. And that's why our plans are so powerful, is because we're giving all of this transparency around the money to the employer and helping them understand how we're using the funds that are getting paid into this health fund.
thanks so much. So for the folks that just joined, we showed a few slides in the beginning, and now I'm interviewing Neer, and then we're going to go back to some slides, and then there'll be time at the end for some questions. And this is being recorded, so you'll be able to go back and watch the beginning if you choose to. Okay, so Neer, what does your insurance cover, and how do deductibles, copays, that sort of thing work?
Sure. So with self-funded health plans, um, as far as what the employees see, it's essentially the same as what everybody's used to, right? You have a typical plan design. So plan design is deductibles, copays, co-insurances, all those different things that make up a health plan, right? So from the employee's perspective, we can set those things to whatever the employer feels is best to set them at, and we can offer multiple plans if the employer feels like they want to offer multiple plans. So all those things are very customizable. We can change those things based on the employer and what they're looking for to provide to their staff. And then as far as the I'm sorry, what was the second part of your question?
Deductibles, copays.
Yeah, so that's what we just talked about, and then there was a second part of it.
Um, just like what does your insurance cover? Um,
Oh, what is it? What does it cover? Um, so essentially, the self-funded health plans have plan documents behind them that kind of talks about all the legal jargon of what's covered. Very similar to a traditional fully insured health insurance plan, they have plan documents as well. And so the beauty of self-funded health plans is we can write the plan documents, right? So we write the plan documents to say, we meaning our agency and our employer client, right? We work together and we write the plan documents to cover what we feel makes the most sense to cover for an employer's health plan. There are obviously, boilerplate kind of templates that are out there that cover the typical things that most insurance plans cover. And then if an employer wants to go above and beyond that, then they have the freedom to be able to do that. Things that typically are not covered are usually like elective procedures, sometimes like bariatric type surgeries and things like that. But again, employers can elect to cover those things for their employees if they'd like to. And with the transparency and affordability that we provide within our self-funded health plans, they actually have the opportunity to be able to add some of those things that they never really were able to add before because things were so expensive.
And just like a little bit more personal question, why did you start Virtual Benefits, and maybe like a little bit more of a background about yourself and your other roles?
Yeah, absolutely. So I helped my wife, Dr. Katrina Iqbal, start Direct Med DPC, which is our DPC practice here in Central Texas, 9 years ago. So we started the practice with 0 patients in 2015, and we've kind of grown it slowly but steadily ever since. Now we have multiple locations and multiple physicians. And so as we started that journey of providing really good primary care through direct primary care, I quickly started to realize if we want to propel this direct primary care movement as a community of physicians around the country that are trying to do this and provide genuine care to their patients, we have to figure out how to build this into employer-sponsored health plans, because that is where people get their care, right? Or their insurance they get from their employer. And so I kind of set out to start asking lots of questions about how health insurance works and really just understanding it for myself. And through that process, I learned, just to be frank, there is a significant amount of greed that's filled into this health insurance system, in every aspect of it, how the health insurance plans are set up, how everything is kept in the dark and behind curtains on what's happening to money, how brokers and agents who are the middlemen that set up these health plans for employers, how they're compensated. That's a big part of it as well. And so, so with all this greed that's in the system, I started to kind of, deconstruct it and figure out how do we reconstruct it where direct primary care is the primary care within these health plans, and we can actually make things affordable. And so once I kind of figured out this strategy that we're talking about on the webinar today, I created Virtuous Benefits in 2020 and started working with employers in our own practice, and kind of working out the kinks and the bugs. And then a few years ago, we kind of launched nationwide. And so now we're basically a team of consultants that goes around the country and teaches businesses how to implement these types of health plans and do healthcare in a much smarter way.
Awesome. And I think that's a good segue back into, it's a lot of technology here too. All right, here we go. So this is your slide if you want to share it.
Sure, yeah. So I thought I'd just put together a quick case study, just to kind of go over. This is a very small company. It's a boutique hotel in Central Texas. They have 6 employees. They were with Aetna prior to engaging our agency, and they actually were on a level funded plan before they engaged us, which is not common. Usually most of our clients are on traditional fully insured network based plans before when they engage us. This company was actually on a level funded plan through Aetna. So level funding, self-funding, meaning it still kind of is aligned with the strategy that we like, but there's still a network behind it that is greedy and is going to be gouging on when we're using the health plan as well as on renewals. So So when we came in, we and took over managing their existing Aetna level funded plan. We looked at their claims fund potential. It's actually double this $4,652, but Aetna likes to be greedy, and so they take half of it. And so that's why I just put 50% of it down. So 4,652 was the maximum amount that they had potential of getting refunded back to them from the small claims side. Um, they were, of course, were not offering direct primary care. They didn't even know what it was. Um, the actual claims were right about $4,000, so basically a wash versus their claim fund. So really had no surplus. Um, the agency fee for the agency that they were using prior to us was included in the premium, and their total actual spend for the year was about $27,000. On that $27,000, with only $4,000 in claims, they ended up with almost a 9% increase at their renewal, and so their renewal cost was right about $30,000. When we came in, we went through our health questionnaire process, and we were able to show them quotes through some of our carriers that are open access plans. And so this is going back to what I was talking about, removing the network. So when we remove the network, we're essentially removing Aetna from managing and administering claims and running everything through their network where they can gouge, right? Because all Aetna was doing was collecting money in premiums and paying it back out to providers and facilities, and then they were taking a huge chunk for themselves every time that they're paying money back out. So when we use these open access plans, we work with a third party administrator. So we remove Aetna from managing and administering claims, and we insert a third party administrator to do that same job, just collect money and premiums and pay it back out to providers and facilities. And the third party administrator gets paid a reasonable monthly fee to do that job. And so they don't need to gouge as they're paying money back out to providers and facilities. They don't gouge anything from the health plan. They're already making their money through a reasonable monthly fee. So we move them to one of these open access plans. And so what that means is, because we're not agreeing to Aetna's pre-negotiated contracts that they have with all these providers and facilities around the country, that they give us no visibility to. Because we're not agreeing to those contracts, we now have negotiating power. So when we use these open access health plans, we have all the negotiating power because we don't have a network that has predetermined contracts that we've never seen or have any idea what they say. And so all of this negotiating, it happens in the background. So the employer and the employer and the employee never get involved with any of the negotiating. And what we do is we negotiate based on a reference point. It's called reference-based pricing. Because when you go to the doctor or a facility, you don't see prices anywhere for anything, right? So the only reference point that we have to be able to negotiate with providers and facilities is what Medicare pays for certain things, right? We know what Medicare pays for all healthcare services all over the country. We also know that it's not enough to keep providers and facilities sustainable. What Medicare pays is not enough. So we pay a very fair multiple of Medicare. So that's how we do our negotiating, is we pay usually 150% of what Medicare pays. And we pay it very quickly. Whereas Aetna and Blue Cross and United, they will nickel and dime an office or facility for months, sometimes 6 months, right, before they cut any sort of check. And so all of these healthcare businesses have staff, they have overhead, they have bills to pay. They can't carry cash for 3 to 6 months. And so when we're paying a very fair 150% of Medicare and we're paying it very quickly, so we cut them a check in a week, they love that, right? And so pretty much every provider and facility in the country will negotiate based on reference-based pricing. And so that's kind of how we handle things. So, and the other great thing about these open access plans is there is no network at all. So literally anybody can go anywhere for anything. Um, and this is where we educate very heavily about direct primary care as well to the employer and the value that it provides. Because if we are having a direct primary care physician like Dr. Panzer taking amazing care of his patients and this employer group employees, spending an hour with them at every visit, giving them his cell phone number, his email address, giving them really good access, wholesale prices on labs and imaging and all these other things, he's physically making his patients healthier, but he's also protecting the money that's being set aside to pay for these small claims from being used unnecessarily, right? Because direct primary care is steering all these unnecessary claims away from the health insurance plan. And so we now have a powerful and proactive strategy that's long term that is behind what we're trying to achieve, right? So going back to the example, so we moved them to this open access plan. The claims fund was about $2,400, so a lesser claim fund, but that's also because the premiums were significantly less. And if you recall what I said earlier, we are funding the claims fund through the premiums. So it's basically a percentage of the premiums that are getting paid in. So if you're paying less in premiums, you're going to have a lesser claim fund. The DPC membership cost was added in for this particular employer at $90 per employee per month. So that's where we came out with the annual number of about $6,500. Their actual claims ended up being about $2,000. And that was about a 57% reduction from their claims that they had filed through the Aetna plan the year before. And that's because we're paying less for the same exact care that everybody's getting, right? And that's because we have an open access health plan and we are doing our negotiating. We're not just blindly operating under pre-negotiated contracts that we have not had any input or understand what they say. So a very significant reduction in claims. And then the actual surplus was very small. This is a small company, so your claims fund is small and your surplus is going to be small. So they had about a $625 surplus. The agency fee is separate here, and I want to help you guys understand why we do that. So we charge $300 for the agency fee, whereas I said in the Aetna plan, it was included in the premium. So there's something also important that happens behind the scenes to understand. The BUCAs are essentially paying all these brokers and agents all over the country to keep the costs increasing. And what I mean by that is broker compensation is a percentage of the employer's premium amount. So if I'm getting paid a percentage of what my client's paying in premiums, every time their costs go up, I get a raise, right? And so that's one of the fundamental problems in the health insurance industry is the BUCAs are paying the brokers and agents around the country to keep the money flowing. And so we have deliberately created our agency in a way where we charge a flat monthly fee based on enrollment, and our fee does not change if their premiums go up or if they go down. And so we're incentivized to have the employer pay us our fee directly so that they know exactly what they're paying us and what we're doing for that money. And so we ask every single carrier that we work with to remove any broker commission from quotes, and we charge the employer our fee directly. So in this case, it was $300 per month. And then the total actual annual spend, we ended up reducing it to about $22,500. They did get a small increase. It was about half of what the Aetna increase was. It was about 4%. So that equated to $791. And so we ended up at a total cost for this employer of about $23,500. And that was a 20% saving moving from Aetna to our open access health plan.
Thanks, Neer. I know I'm cognizant of time, so I'm gonna move us on. Is that okay?
Absolutely.
All right. So I think Neer was started talking about DPC more towards the end there, and I'm gonna um, continue that conversation. All right. So I'm gonna just tell you a little bit about my story and why I ended up starting a DPC practice. This is a few pictures of me from after residency. I worked in Ethiopia for a year. I was a medical director, straight out of residency, and young and idealistic, and wanted to make the world a better place, and had an opportunity to go with my wife, and it's interesting because I thought I would learn a lot about tropical disease, which I did, but also, I learned a lot about systems. And I'm bringing this up because, like, later I learned more about the U.S. healthcare system in the complexity there. But in Ethiopia, it was kind of interesting. We didn't have a lot of resources, and that led to bad health outcomes. But the resources that we did have, we were able to get those resources to patients very efficiently because I we had a pharmacy there, and I could go dispense meds, and we had a lab, and we can get labs within an hour, and we had an inpatient unit, and I could walk a patient to the inpatient unit and admit them to the hospital, the inpatient unit there. And so there wasn't a lot of resources, but we were able to get people the resources that we had very efficiently. And so it was this sort of simple system. And then I came back. Um, sorry, this isn't clicking forward. I In 2010, when I was moving back, I was overwhelmed, with the complexity of our system. I'm in this big city in Chicago, and lots of resources around, but it was really hard. And this is just a picture of a doctor that I know who, all of us feel this way. Where I'm sure as patients, you guys experience this. Like the human connection is not there in the way that it was prior to electronic health records, and some of the electronic health records are obviously like have a lot of potential to and have already helped in many ways, but also there's a double-edged sword element there where it's taken away from this idea of having a human connection. And um, and for me, I had the privilege of collaborating with this physician, Christine Sinsky, and we published an article about a year ago, a little over a year ago, and in it we wrote, as physicians, we know that we often spend our days doing the wrong work for our patients. And in the course of writing this article and my reflections on many years of trying to change from within the system, I realized I needed to do something different, and I needed to be working in a primary care, in a way that I think primary care works best. And so which brings the question, like, what does good primary care look like? And there's this concept of the four C's, and first, contact, comprehensive, coordinated, and continuity or continuous. And so we all want from our primary care that you can get in touch with them when you have an issue. And everybody I talk to about direct primary care says they can't get in touch with their doctor, so they go to an urgent care, or they don't do anything, or they go to an ER. And so that idea of being able to get in touch with you as core. Also, that you're able to take care of a lot of different things, that you're not just passing somebody to a specialist for every complaint. But on those patients who do need to see a specialist, you're staying involved in the coordination. And then lastly, maybe most important, is that you build a relationship, and there's trust, and then there's continuity. So you're not seeing another doctor in the practice. You're actually seeing somebody that you know when you have healthcare needs. And so it's widely talked about. This is what primary care is, but most of primary care is failing at doing this well, and direct primary care accomplishes this better than any other model. And I had several friends doing this model and just sort of became convinced in it. And I think this image might, sort of bring it together some. Like, in the conventional healthcare model, we have all of these sort of middlemen, regulators, administrators, insurance companies between the doctor, nurse, et cetera, and the patient. And in direct primary care, it's doctor, patient, and care team, I should say. I have a care coordinator that works with me, and I'm very supportive of nurses, and so, but basically the care team, the core care team that knows the patient, is working directly. And so how is primary care, or sorry, what is the trends around direct primary care? Many people in Evanston, where I live and work, are not familiar. I've talked to many people, and this is a completely new concept, but it's increasing, and it's increasing relatively rapidly. It's still a small segment of the population, but the numbers are only going up. And in terms of doctors leaving other types of primary care to join this model, and then patients. And so this is a picture of memberships increasing, and then also a picture of individual and employee. The light blue line is individual, or also called retail DPC members, and then the dark blue line is employer-sponsored DPC members. This isn't all of this is within this one EMR organization that this, as you can see at the bottom, says Hint Health. So, but these numbers are generally increasing. That's why I shared these slides. Um, for my practice, we called Bridge Direct Care. Our membership costs are $85 for a single member, and $60 for a child, $160 for two adult household, and $200 for a family of three. And then for employers, $80 per employee for groups of 5 or more. And so I think I'm going to stop there, and we can take questions. Let me see how I could stop sharing my screen here. Thanks for listening. Any questions? I said you could put questions in the chat too. I haven't had a chance to check the chat. Oh, there we go.
I have a question. I can get started if you want me to.
Yeah, that'd be great.
This was really good information. It's a good refresher for me because Neer, I came from the employee benefit side of things. I was in the business for about 5 years and worked primarily with groups 50 to 1,000. And so some of the things that you talked about with self-insuring and reference-based pricing is very familiar. And it's something that has been talked about for a long time, right? Like we were talking about this stuff 10 years ago, and it got me really excited. And there's not a lot of things in the health insurance space that can get you excited. And we would talk to employers, say 150 to 500 employees, and they'd be getting 10 to 15% increases with the Blue Crosses. They couldn't understand how it worked. There wasn't enough pain, maybe at the time, to move from a fully insured arrangement to self-insurance. And so I guess my question is, what has changed over maybe, say, the past 5 years? How are employers responding to this? And then what does the education process look like? Because obviously you have to get the employer on board. And then how are you guys getting to the employee level and really saying, look, like, here's how you can take control of your own costs? And obviously the healthy folks doesn't matter because they're not using the plan, right? So you need to get to the folks who are using it. So maybe if you could talk a little bit about your experience with educating employers and getting them on board with the idea of level funding and self-funding and away from the traditional model of getting a 10 or a 12% increase year over year.
Yeah, absolutely. Thanks, Nathan, for those questions. Those are great questions. So I think what's changed in the past several years is the direct primary care landscape. So when we started our practice, we started my wife's practice 9 years ago, there were not very many direct primary care physicians around the country. There were probably only a couple hundred. Now there are thousands all over the country, and there are new practices opening every single month. Because physicians are getting sick and tired of practicing medicine outside of their terms and outside of how they were trained. And so this landscape is growing exponentially now. And so we have coverage, DPC physicians, to help link employees to all over the country. 9 years ago, I would not be doing this model. We just did not have enough of the landscape. And I don't think that this model works at all without direct primary care. There are other insurance carriers and TPAs that are trying to push reference-based pricing, as a model, but they're not using direct primary care. And I think direct primary care is the missing link, because groups in general are going to be taking time bombs if they're on a reference-based pricing model without some mechanism that is helping be proactive and focus on wellness and prevention. Insurance-based primary care is never going to be able to do that, right? Because they're just forced. Those physicians they are not bad physicians. They are trained the same way as direct primary care physicians are, but they are forced to see an unsustainable amount of patients per day and do all kinds of nonsensical charting to get a reimbursement rather than actually spending time and listening to their patient and helping them get to the root cause of what's going on. So DPC is definitely a critical component within this strategy of using RBP and removing a network. Education is another huge part of what we do in our agency. So you're absolutely right. This does not work if employees are not educated properly. And so our agency puts a tremendous amount of time and effort into educating employees. We're also a full service agency in that we don't just educate at an employee presentation or an open enrollment meeting one time and then expect everything just to work, right? Usually whatever we say in an open enrollment meeting goes in one ear and out the other, and they forgot everything we said the day after, right? So we are very involved and hands-on with our clients and the employees that work for them. So they all have our cell phone number, they have our email address, they can text us, they can call us, they can email us, they can live chat with us on our website. And we have a care navigation team within our agency that helps field all of these requests, right? And we are directing patients to the right places, to the right facilities that are not going to gouge them and that are going to charge the prices that we know are the actual cost of care. And we're also even going to the point where we'll help a patient, if a provider or facility is being difficult and saying, I'm not gonna bill this insurance no matter how quickly they pay me or how fairly they pay me. We'll just ask the patient to pay the cash price of that visit, and then we will file the claim for them. They'll send us the itemized receipt and the credit card receipt, and we will file the claim for them. So we just try to give them as many tools and resources as possible and make it as easy as possible for them to get care, as seamless as they've had it in the past.
Okay, I have a question.
Yes.
I'm another DPC doctor. Started almost 2 weeks ago, and we have in DPC in Illinois, along with Jeff, we have I think we have total 27 DPC doctor in Illinois, and I guess we are 13 in the central Chicago area, I guess, right? And we are very much interested in having to have some kind of benefit advisor. I think you can play, or your kind of agency can play some role to have a plan, embed with all of us together in a plan and reach to the employers to offer this kind of, all covered insurance plan instead of just direct primary care, and do something for, us. So is there anything you can do for us?
Yeah, absolutely. So that's it. That's exactly what our agency is doing. We work nationwide. We work all around the country, and we work with DPC physicians and their employer relationships, right? So all of this starts with an employer. It starts with employer relationships, and that's what we're all sort of doing all over the country independently, right? Is we're creating relationships with employers. We're also getting many executives and business owners as our patients. And once they realize what type of care they're getting from us, they start asking, how do I make this part of my company's health insurance plan, right? Because I love this and this is affordable, so I don't see why we can't build this into the company health plan, right? So that's when we will usually get engaged or introduced. A DPC physician will usually make an introduction to us and their patient, who might happen to be an executive or an employer, or maybe they are spending time at the Chamber of Commerce and doing some speaking engagements and starting to get some interest from employers on, yeah, I'd love to learn how to do health insurance differently because it's eating me alive. It's too expensive and my employees can't afford it. So I encourage everybody to just continue creating those relationships and help employers understand there is absolutely a different and better and smarter way to do health insurance for your staff, and then make those introductions to us.
So another question I have is, it's this employment that the insurance part of it. for example, I have patient who was Kankakee mayor. I have patients who, like, are like friends with the mayor of Frankfurt. And I like to tell them that what it is, but I do not know how. Like, it's like a part of it. I can explain my DPC, but
Sure.
how you guys are doing this thing, how it's making a difference. I'm reading this Dave Chase book, and I actually gave it to him also to read. But I don't
Right.
think so that it will, it does look like too good to be true to everyone, to be very frank. No one believes in that, right?
Yep.
So how can I, like, he actually asked me to come join me at one of the congressmen was coming, Jonathan Johnson was coming, and he said, like, you can present your idea, but I don't want to present my idea when my idea does not have, a references and all that. And there is a presentation which is required to have them think about it seriously, because the Frankfurt community itself is, I guess, 300 people, employees, and we can build around it. And he's kind of open for the idea, but I'm hesitant to talk. Like, I'm literally looking for some kind of presentation I can present to him through which he can think that, okay, yeah, that makes sense. Someone who can use their data, how much they are spending, because their data was actually on the internet somewhere. Like, I was talking to one of the person just like you, and he went into their website. He told me about all those 200, 300 employees they have under them, and that is how much they are paying for that and stuff like that. I guess you guys have some way of finding out what they are paying for the health benefits and all that.
Yeah, so we have plenty of our own data. We have our own references that can speak directly to other employers and municipalities, cities, school districts. Those are all places where this model can help tremendously transform a health insurance plan on not only costs but also increasing quality. So and we don't expect the DPC physicians to explain all of this and present all of this to employers, right? And that's why we ask you guys to make the introduction to us, and we will work as a team together, us and you, and we will present exactly how this all works, and we will help answer questions that the employers have, because they want to look at this from a high level perspective, right? And when I started our DPC practice, I was presenting just DPC to employers, and I felt that I was, chasing my tail. So now we know how to do it in a holistic way where the employers can actually understand. Yeah, Jeff, go ahead.
Yeah, no, I'm cognizant of time here, and I do want to, if you guys wanted to connect offline, that would be great. I want to, for those who watch the video later too, and they're in the Evanston area, I just want to have like two more things about DPC.
Yeah,
If that's okay.
absolutely.
Sorry to
Yeah.
cut off that conversation. Yeah, I just want to say that, for those of us that are doing DPC, I feel similarly. Like I need to learn about insurance, but really, like DPC, um, it is, I've done it now for, 2 months or so, and it's unbelievable how like liberating it is. And you could, I just sent the applications even are designed for communication. So I saw a patient on Friday and did her pre-op clearance. She had surgery today, and I was able to just message her at the end of the visit, future message her and be like, "Hey, I hope your surgery goes okay today. It goes well today." And she pinged me back today. I'm able to like, and just you're just in touch in a way, and it feels good because you can like care for people. And so whether you're interested as an employer or as an individual, there's options out here. It's so nice to like partner with Neer. There are a lot of ways to sort of start moving in this direction for individuals, for employers. And yeah, thanks so much for those of you that joined and those of you who watched later.